here is where things have gotten a little bit confusing, right? We've had a big bearish candle that is now getting fully corrected. If this bar holds and we do not break and close below, and there's about an hour and 10 minutes before that happens, this is not 100%, but pretty much going to ruin the opportunity here on the 4 hour, because now in order to get a violation of this level, we would need a lower low, lower close beyond here. And that's right on top of that first target level, if that's the level that you're shooting for. If you're shooting for the second level, there's still meat on the bone. However, if we go down to the hourly, it's a different story. And these are some conversations that we've had recently in the Q&A in the live room. So I wanted to bring this up. On the hourly, we certainly have a lower low, lower close, and now we're already getting that retest. And this is the retest that we would be looking for in order to get short. So you can see there are different perspectives depending on what time frame you're looking at. And here's the issue, right? On one time frame, the 4 hour, perhaps you have a signal that says do not take. On the hourly, perhaps you have a signal that says take. And the question is, which one do you do? Well, remember in yesterday's video, I told you about that IPDE process: identify, predict, decide, execute. That 4-step process that we want to go through to determine our directional bias and eventually set up our trade. Well, something that goes hand in hand with that 4-step process is the time frames in which you're allowed to look at and what you use them for. Meaning when you're going through that I and P, that identify and predict, are you using perhaps a higher time frame to set up that bias and then going to a lower time frame to look for your specific reasons for entry? Or are you doing the whole process on the same time frame? In this example, if you're doing the full process on the same time frame, then this is going to be a grade A trade for you, right? You identify break and close below previous level of structure. You predict a move lower to the same levels I just showed you, and then you decide, hey, I'm going to wait for a pullback and a lower low, lower close to enter. Boom, everything lines up. However, if you're doing that analysis on your 4 hour and you're saying, okay, what do I identify? Well, identify a break of structure, but not a close below. This is nothing more than a rejection candle, and actually a pretty bullish sign on this time frame. You never get to the point where you're looking for that pullback trade because you never made it past the I and the P. You don't have that bearish prediction because the price action hasn't given it what you need, and that's kind of like your safety net for keeping you out of trouble. Now, do you need to have the higher time frame and the lower time frame aligned? Do you need to do higher time frame analysis and lower time frame analysis? That is completely up to you as a trader. That's one of the gift and the curses of traders, of trading, where the gift is that we can do whatever the hell we want. And there's so much flexibility to create our style and our strategy around our personality and around our philosophy to ultimately achieve what we want to achieve. The curse is that